Today's conversation is sponsored by First Generation Capital Partners.
Leverage is a beautiful thing. We learned this in the Finance 101. When you can apply leverage to an asset, you can grow your wealth in tremendous ways. But what's oftentimes overlooked is that leverage can also be used against us at the same time.
You're listening to the Going Long podcast with Billy Keels, the #1 podcast for long-distance real asset investing.
Welcome to the Going Long podcast. We're back once again to continue to help to educate you so you feel much more comfortable as well as confident in investing beyond your backyard. I'm your host, Billy Keels, and we're back for another amazing conversation. Like you're really going to like this one goes deep. So you're going to really love this one. Before we even get to the conversation, though, I have to say thank you for continuing to invest your time here. Really appreciate it. It's not anything that we take for granted, and just want to say thank you for doing that each and every week, multiple times a week, actually. And so with that stated, appreciate the fact that you're continuing to tag us on LinkedIn, on Instagram, that you're continuing to share this with family and friends. And for those of you who've already left honest written reviews, really appreciate that. If you keep thinking about it, well, there's a little video here and it will make it really easy for you. Also, if you want to check out any of the previous episodes, because you either want to share, you want to listen, or you remember about a guest, just go to firstgencp.com/podcasts. You can find every single episode there and just check it out. So with that being stated, there's a couple things. Like today's guest, it's a really cool concept. It's one that we have not necessarily talked about a lot. And at the same time, it's a really powerful strategy for anyone who wants to have more control over the outcomes of their life. So today we're going to talk about this one very specific concept in terms of, how you can, really in essence, be your own source of financing. And so we have an expert who's a certified financial planner. He's also the founder of Lake Growth Financial Services. We're going to get to the conversation that I had with Mark Willis, and we're going to get to that just after this. So if you want to learn how becoming your own source of financing can add financial control to your long-distance investing success, then guess what? Today's the conversation you're going to want to listen to until the very last word. Yes, word. You know why? Because today's guest not only had his early professional experience in the education sector, and I'm sure he's going to tell us a little bit more about that. He also has vast experience in the sales arena, in financial services industry. He's also as consultancy as well as a coach. And today, not only does he have a super successful podcast, which is the Not Your Average Financial Podcast, he's also a certified financial planner. Hang on a second, everybody. You're going to find out a lot more about that. And he's also the owner and founder of Lake Growth Financial Services. It gives me great pleasure to welcome to today's conversation, Mr. Mark Willis. Mark, welcome to the show, man.
Hey, thanks, Billy, for having me on.
Yeah, man, it's always nice to have someone who is, well, I can't tell where you live yet because you haven't told it. And that's like kind of one of the things. Of course, I'm going to ask you 2 questions in the very beginning, and I'm going to ask you 3 questions at the very end. And I almost blew it by telling everybody where you live. So I can't do that, man. So here's the thing. I want to jump right into getting started with the conversation, as long as you're okay with that. Mark, can we get started?
Let's do it. Jump in.
All right, cool. So help us understand, where is it that you call home today?
Well, I am a native of the Midwest, and I went to school down in Texas, where I spent 7 years in the desert, as they say, and then found my way back up to Chicagoland, where I live now about an hour west of downtown city. Spent 11 years in the great urban metropolis of Chicago, great city. But now, a nice little hop, skip, and a jump away from the urban sprawl has helped my family really enjoy a nice, spot in the due west of downtown Chicago. And we've lived here now for several years, and our firm at Lake Growth Financial Services is bustling and growing with several different locations throughout the area here. And my hope in my job, although we are in the Chicago area, is to serve and help people in all parts of the United States and really around the world. We've got clients in all 50 states and in other countries around the world. And our focus has been on helping grow businesses, real estate investors, and even some Super Bowl champions to build real wealth outside of Wall Street, which we can talk more about, and help them to do that in a way that does not take any unnecessary risks and help our clients in becoming their own source of financing. And I'll just quickly share, and then I'll pass the ball back to you. I believe that banking and who controls the function of banking in our lives is really the cornerstone of financial freedom. Really, it's if you don't control the banking function in your life, then it's going to be very difficult to find the financial control or freedom that many of our clients are looking for when they come to find us. So whether they're here in Chicagoland or in Maine, Washington State, or Tokyo, we're here to help folks all around to become their own source of financing and take back control of their financial future.
Fantastic. So taking control of your financial future is definitely something we're going to dig into. I appreciate you helping us understand where you are in Chicago. So we've got two fellow Midwesterners. I lived in Texas, by the way, as well. I lived there for probably 7-8 years, but this is way in the late 70s, early 80s. Anyway, so let's get on to question number 2. Question number 2 is, I love positivity, and I'm always interested in having our guests share with us. And today you're our special guest. What is the most positive thing that's happened to or for you in the last 24 hours, Mark?
Oh, man. Wow. In the last 24 hours.
Yeah.
Well, we just had Labor Day here in the U.S. And so we got the day to enjoy all of the incredible gifts and experiences that we get when we have the day off as a family. Ice cream was involved, going to our local ice cream parlor. And we had some time at the park, 2 different trips to the park in one day because I've got a young daughter. She's always trying to get us back to the playgrounds. So I just had a great day off. And, time is really our most, it's a non-renewable resource, and it's an asset that you only can spend or invest. So I really enjoyed that, found a lot of gratefulness in just the incredible abundance of our area here and the incredible parks and forest preserves that we have around here, and some great ice cream. So that's something that has got me feeling grateful as a result.
A day off, family, and ice cream. That all sounds fantastic. So appreciate you sharing that with us. And Mark, I need to make a little bit of a confession. And the confession is something that the entire Going Long podcast family knows about me already. I'm a recovering perfectionist. So what that means is sometimes I do things that are a little bit kind of not even possible. Like I tried to tell your entire life backstory, like literally in a second and a half. That was never going to happen, but I try it anyway. So here's the thing. I've got to start by asking you for some help. You started a little bit, but and as I ask you for some help, which is to have you tell your own backstory in your own words, and you can take a lot more than 1.5 seconds. The thing that I would also like to ask you is, you're telling your backstory, Mark, could you also talk to us about some of the major decisions that you made to get to this point in your journey? And then we'll talk about some other things. I don't know exactly what those things are yet, but we'll see where you and I take the conversation from there.
Sure, Billy. Well, I'll tell you, as I look back on my life, maybe you can relate. It feels about like 1.5 seconds as I look back on the time. My grandfather said that life is like a roll of toilet paper. The more you use it, the faster it seems to go. And that's been the case so far anyway. Now, as I look back on my life, I'll just quickly share, and this might be relevant to a lot of your listeners. I woke up as a young adult in the money game, not really understanding how it all worked. Have you ever walked into a movie theater, let's say maybe 45 minutes into the plot, and things are happening on the screen, and you sort of can figure out you can't figure out what's going on. You can see the people, there's this dude punching that dude, or maybe she's kissing the other guy, or, there's an argument going on. You don't know what's going on. You don't know why they're doing what they're doing. You can just sort of see it on the screen, and you try to catch up as best you can. And even way late into the movie, you might miss some key points because you missed those first 45 minutes. I feel like a lot of people I work with feel that way about money. They woke up as young adults trying to understand this money thing. What is a Federal Reserve? What is a currency? What is cash flow? What are real assets? These are all things that don't get taught necessarily. Certainly not me when I was a kid. I didn't grow up with much of a silver spoon in my hand. I had to figure it out. And as I was getting into college, I took on a lot of student loan debt, and I didn't know if that was good or bad, right? So I just did, because I was told to. And I feel like a lot of us are just told to do things, and we just follow instructions. It's the lemming mentality, right? We got that 401k. Why? Because we were told to. We invested in stocks, bonds, mutual funds, other amateur retail investment products. Why? Because we were told to. Oh, that fancy crypto? Sure, do it. It looks cool. We were told to. So anyway, I ended up with 6 figures of student loan debt, and I graduate from my undergrad and then my graduate degree in the middle of the Great Recession in 2008. We moved to Chicago, very expensive, with no income, no marketable job applications, no marketable skills. So we had no real income. no plan to pay off the debt that was like a noose around my neck at that point. And that was the biggest problem, was I had no plan. I could have maybe made it if I had just had a plan. So the only thing I knew to do was to listen to the radio and hear infotainers like Dave Ramsey talk about how to get out of debt. So I followed his method best I could, the debt snowball method. And I was throwing all this extra money at the problem, Sally Mae, and I kind of jokingly say that I married 2 women in college, Billy. I say, I married my beautiful wife and I married Sally Mae, and she was around and we wanted her out of the relationship. So we were trying to throw everything we could at that debt. And then about halfway through that project, we had a mentor come and visit us. He was a professor from my college. I respected him greatly. And he told me, Mark, is it possible that Dave Ramsey might be wrong about something? And there was this, you could hear the cracking sound of my airtight worldview. and again, I was also very much skeptical oh no, of course not. Dave Ramsey must be right. He's got the corner on truth. He wrote the 5th gospel, right? His Financial Peace University was brought down from Moses on Mount Sinai. That's what I thought, sort of. So I really dug deep into what are some better ways to not just become debt-free, which was one of my goals, but how do I become better than debt-free? What's better than debt-free? Well, being the bank is better than debt-free, right? Some people say, well, I don't want to be in debt. That's fine. But what if you could be the banker? What if you owned and controlled the entire financial process of your life, much like bankers do today for so many of us? So that was sort of my aha wake up moment. Maybe I'll pause for a minute before I go any further. Billy, any feedback, or what would you add to that?
Yeah, I mean, so there's a number of different things that you've talked to us about, and a lot of, as I think about corporate, especially those high rising corporates that are, and they're earning the salaries that, not are the 6 figures and above, but starting to realize like, hey, listen, there are other things that can happen in life. And, sometimes when we follow one path, that can be a very good thing of focus. And at the same time, you get these questions that just can fundamentally crack everything that you've thought. What if Dave Ramsey was wrong in this particular instance? But I think the one thing that, and I have a feeling that you're going to go down that track, but I know that my education around money, and you talk about things like currency, you talk about things like the Federal Reserve. And for those people that have read, books like The Creature from Jekyll Island, it really opens your mind to what is really happening. Right.
Right.
But you said one thing that I believe is fundamental, and I'd like for you to explore it a little bit more. When you talked about the banking function, like when you can be in control of the banking function, what does that mean? Right? Especially for that person that's busy working 80 hours a week in their corporate role and super, super busy. I know how fundamentally important understanding the banking function is. So maybe you can break that down for us a little bit and help us bring it into our living room so that we understand what that means for me as the Going Long family listener today.
I'll literally put it in our living room because that's where my fishbowl is. And awesome. I want to talk about my fish. So I have a little fish in our living room area. His name is Ice Cream, for those interested. And in case you were wondering, he is in a bowl, which is monitored by my daughter and I and my family. And we add food to it every day. We keep the temperature the right temperature. We make sure that it's cleaned regularly. We control everything about that little fish's existence. If we weren't keeping an eye on him, or if we were, malicious, he would be a dead little fish pretty quick. If we do the right things, he'll survive, he'll thrive. There might even be little baby fishies in there if we had a couple more, romantic nights with some lady fish. So there's a lot to do with the environment in which that little fish lives. And I and my family control the outcome and destiny of that little fish's life, whether he knows it or not. He's not even maybe aware that he's swimming in something that we've basically designed for him, for our pleasure, right? Mm-hmm. That's how banks are with our lives. The banking function is far more important than what you got in your rate of return in your 401k or your restricted stock units. It does not matter if you're saving in a brokerage account or a 401k or highly leveraged options, or even tangible assets that we really promote and enjoy. If you have a banker who's able to pull that lever on you at any moment, you can pull the rug out from under you too. Leverage is a beautiful thing. We learned this in the Finance 101. When you can apply leverage to an asset, you can grow your wealth in tremendous ways. But what's oftentimes overlooked is that leverage can also be used against us at the same time. So now that we've gone to the living room, let me take you on a history lesson way back, thousands of years. There's a great book on this topic. It's called Debt, the First 5,000 Years by David Graeber. Great book, great topic, great title, scary title. If debt has been around in human civilization for 5,000 years, I think it's safe to say that banks are going to continue to exist for many thousand more years. And so the question really is, why is it that banks have the stranglehold on every major economy? Why do they have the biggest buildings in town? Why do they have the nicest lobbies? It's because they control the environment in which our money lives. One more metaphor, and then I'll bring it back to practical. Let's say you're flying an airplane. You're flying your airplane from Barcelona back to, Columbus, Ohio, let's say. And let's say it's a private plane, but you can only do, let's say, 200 miles an hour. That's as fast as that little plane can go. And you're flying back toward Columbus, Ohio, but there's a headwind pushing you at 300 miles an hour. It's one of those high stratospheric winds pushing you at 300 miles an hour in the opposite direction. Now, are you going to get to Columbus no matter how hard your plane pushes? Of course not, right? You're going to be moving toward, Finland or whatever at 100 miles an hour, right? So this is a big problem. I had a guy, he was earning a very high six-figure salary, very well done, accomplished, professional, white coat type guy. And he was very proud that he was making 12% in his 401k over the last 3 years. Well done. Well done. And we got into his mutual funds, and there it was for the last 3 years. Well done. And that's, of course, a pre-tax number. So we had to discount that a little bit. Maybe after 12%, maybe he's only getting 7% after tax, but still well done for 3 years. Then we looked at his debt. We looked at his cars, his boat, his house, his vacation home, his medical loans, all of those things that compiled roughly $80,000 a year, which was about 30% of his income at the time. That 30% is a guaranteed negative rate of return. And it's a negative rate of return that's after tax. Mm-hmm. Okay, so he was making a great, 8% after tax in his 401k, but he was losing 30+% volume to debts, banksters. This is why banks will always win. Even if interest rates go back down again, I believe that banks will only make more money because they can sell higher volume. Volume is what kills us in the banking world. It's a lot like eating too much food. When you eat too much food, it doesn't matter the rate of your eating it, right? The rate doesn't matter. It's the volume that puts the love handles on the sides, right? So similarly, debt's biggest problem is the volume, not the rate. So with these sort of concepts, I started to realize that I was under the thumb of a bank, and her name was Sally. And I had to find a way to not just become debt-free, but actually use the power of banking to my advantage. I wanted to, like a judo move, take the problem of debt and become the banker. I wanted to use that and actually benefit from the thing that was killing me as I graduated college. So that's a quick synopsis of my own aha moments as I was discovering this thing, which we now refer to and has been trademarked as bank on yourself.
So being able to bank on yourself, and I appreciate that, being able to take us from the living room to the airplane and be able to, bring that into a story for us. Although I still don't know if a lot of people know who Sally is, but that's okay. I know who Sally is because I had a lot of college debts. So,
yep.
So if you don't,
she goes by many names, but
yeah.
she's the wicked banker who controls our lives after graduating college in the U.S.
Yes. So here's the thing, because a lot of people may not even know that you can take on this function because, well, the bank is the bank, and that's why they're there. So how is it that you even got insight into the fact that you could become your own source of financing, as you like to say, because it's not something that's generally available to teach people or help people understand that.
You're right. To become your own banker, many people think you have to raise $100 million and then get a bank charter get FDIC insurance and, wait a decade or two to get one of those licenses to be a bank. You can do that. However, there's a much simpler way to go for mere mortals like you and I. So typically, there are only a few places you can park money. And now I have to really say, as a certified financial planner, it was not obvious to me that being your own source of financing was a possibility, even after I got those designated marks, right? Even after I went through years of training, they don't exactly spell out this concept in the CFP world, because in CFP land, the real goal is to get as much money into the markets as possible. And there's a whole backstory there, which you and I probably don't have time to get into, as to why we were pushed into becoming a nation of investors and speculators in the mid to late 70s. But we'll leave that maybe for another time. To answer your question, it's strange, but contracts became central to my studies. Contracts. I know you're big on contracts, Billy. Anytime you have a hard asset, the only reason you actually own that asset is a contract. Without a contract, my house is squatter's rights. Yep. I don't have a right to this place except through a contract. Other than that, it would be whoever has the bigger shotgun, is who owns this house. So I need a contract that proves that I own this house that I'm living in. And similarly, any syndication deal I do, or any other real asset that I might participate in, is going to have basis underneath it, a contract. And I believe that contracts really are the bedrock of civilization. So I started really digging into this idea of contracts. And wouldn't you know, of all things, life insurance is based on a contract. And I thought to myself, well, that's interesting, because insurance, typically it's like hey, maybe I'll need it, maybe I won't. Like, I get fire insurance on my house, hoping I'll never use it.
Right.
I'll get health insurance, hoping I never get sick. Life insurance, pretty sure I've got a timer on my back somewhere, on my back. I can't find it. But so this is an interesting idea, that I have a contract that's guaranteed to pay out someday. So I started digging into this idea of life insurance, and there's been several books written on this, including Pamela Yellen's book, The Bank on Yourself Revolution. That was a real eye-opener to me. So using a specially designed form of dividend-paying whole life insurance, I could become my own source of financing and buy back the debt from my banksters, as I call them, Sallie Mae, Nelnet, the federal government. And I had some credit cards too, got to be honest there. So I built up my own capital reserve in something called a cash value life insurance policy. So I'll just very quickly explain what that is. I'll keep it real brief.
Yeah, I was going to say, when you do that, so can you explain what it is? But then I'd also like for you just to kind of I don't think there's really pros and cons to it, but some of the things that, as you explain what it is, like some of the things to take into consideration that, could be perceived as pros and could be perceived as cons. Yeah,
there's definitely no silver bullet out there for anybody. So what we're looking at is, it does four things, and I'll keep it to an acronym: TGIF. TGIF. All right. So first, the policy builds a cash value that can be accessed tax-free. So tax-free is an amazing advantage, and there's several different tax advantages beyond that, but you can access the money in the policy without taxes due. That's a liquid account, meaning accessible money that we can use for any purpose, no restrictions. It also, grows guaranteed. So the policy has a guaranteed increase every single year, regardless of market conditions. Last year in the stock market was pretty bad. It was a bloodbath, 20%, 30% losses. My policies and all of my client policies grew and hit all-time record highs. Now, you mentioned downsides. This is not a double-digit rate of return investment. This is a life insurance contract. It's going to hit middle single digits, pretty, steady, growing going for the long range win here, not get rich overnight, as to your podcast. So it grows on a guaranteed basis every year. And that's beautiful when markets are melting down like they were last year, because we can then use this money for making investment purchases and decisions if we want to. Hold that thought. Third, I stands for insurance. It will solve the insurance need for my family. It'll leave more money for them than I could save for them. So that's I is insurance. And then F for the TGIF. F stands for financing. You can become your own source of financing, because this cash value of ours that we've built up in this policy, again, it's built on a contract, can be borrowed against. I can borrow against my cash value and then go do whatever I want with that money. Maybe it's invest, maybe it's paying off a debt, but crucially, and this is really one of the most important parts of this entire concept, we can borrow against it, and the policy value, the cash value, will continue to grow and earn interest even on the capital we borrowed. So if I've got a $200,000 cash value.
I was going to say, can you please repeat that last part before you give the example? Because I just want to make sure people heard what you just said.
Yeah, it changed everything for me and my family. So if I have money, let's say if I have a cash value life insurance policy and I decide I want to borrow against that cash value, the policy cash value will continue to grow and earn interest as if I hadn't touched a dime of the money. Now, if I had $200,000 in there and I borrow against it $150,000, let's say I want to go invest with one of the private investment options that you might offer us, right? Couldn't I borrow against my policy, give the money to you to invest or whatnot, and my money continues to grow and in the full $200,000 continues to earn interest and dividends, even on the capital I borrowed. And we've got the money out there in the world doing great work in whatever investments we might stumble across or decide to invest in. To me, this beats paying cash for investment opportunities. It sure beat paying cash to pay off my debts. And lastly, I think it does a great job of helping us make major consumer purchases too, like buying a car. Like, why would I buy a car with any other means besides my policy? So with all that in mind, that's the quick synopsis of how I ended up paying off my debt. And not just that, but becoming, a regular real estate investor, business investor as well.
So, and I appreciate you breaking that down. And also, it's this conceptually just where you can have currency working in two different places at the same time. I tend to go back to this whole thing of being able to leverage the efforts of others, right? And in this case, It's the currency being able to be leveraged in two separate places at the exact same time, conceptually, right? So a couple of things, only because pretty soon we got to get to the going long final three. But what you've helped us to understand so far is really the whole concept of, the banking function, how we can internalize that, how we can begin to do things that are not only tax efficient, but also allow us to grow, allow us to be able to leverage contracts in the form of insurance, and also be able to help us from a purely financing function, right? Which I think is great. But you mentioned one of the things at the very, very beginning that I want you just to help us understand. But before that, so this type of a vehicle, let's call it, this type of vehicle can be used for, tangible assets, businesses, intangibles. Is that correct? More or less, I'm sure every case.
Yeah, there's no prohibited transaction. You can use it for anything.
Okay, thank you very much. That's for those of us who understand the self-directed IRA world and all that other kind of stuff. So the one thing that you mentioned, and I would love for you just to help us understand it, because I think we hear it a lot. It's thrown around, but no one really ever explains it. And you do a great job of explaining and educating us. When you say that you are a fiduciary, what exactly does that mean? And what scope does that cover in terms of investments?
That's a great question, and I'll keep it brief. It's a great question because there's so many misnames out there, and many people throw phrases and terms around without real meaning behind them. In the United States, you're probably familiar with USDA organic. And then there's all these knockoffs like all natural and 100% natural and other things that are not USDA organic. We know that to have the label USDA organic, you have to jump through a lot of hoops to get your food to that level. So what is a fiduciary? It's a certain standard of intentions and ethics that means I must work only in my client's best interest. Now, that phrase, best interest, is vague, and it is only as good as the heart and trust that comes with it. So, we know Bernie Madoff. We remember him. He was a fiduciary. Okay. So labels can really be only as useful as the person that's wearing them. So be careful who you work with and get to know them and trust them. Even though I hold that standard as a fiduciary, and I have to work in my client's best interest according to the CFP board, and I'm happy to wear those marks and to hold that standard for myself and to my other advisors here. That is something that still comes down to trust at the end of the day.
Fantastic. Well, I appreciate you breaking that down for us. I specifically appreciate you giving us a very concrete example, and also making the suggestion that we'll continue to get to know more about you or anyone who is a fiduciary. So, but the thing is, like, Mark, it's amazing, man. Like, you've helped to educate us so much and understand how we could become our own source of financing. You give us concrete examples, and we have to get to the Going Long final three. Can you believe that?
Let's do it.
Okay, let's do it, man. So here we go. Question number one on the Going Long of the Going Long final three is, well, we're fellow Midwesterners, and I've kind of lived over here in Europe for the last 2 decades. So I'm always interested in understanding, like, what is your favorite European city that you've either visited or still on your bucket list to visit?
Yeah, well, I have been to Europe only once, and it's been years. And I'd say one of my favorite spots was a town in Madrid. Or was it just outside of Madrid? It was a small little town. I loved Madrid too. Been to Barcelona, which is an incredible town. But when I was there, I just loved the idea of the running of the bulls, and I loved seeing some of the famous spots in history, some of the incredible churches. We don't make beautiful churches or architecture like we used to, man. Yeah. And Europe has got it down for that. So I would say maybe Madrid, or heck, Barcelona is a beautiful part of the world. So
that's fine. We can go with Madrid. Yeah. That's fine. And most people would go, "What are you saying, Billy? You can't do that if you live in Barcelona." But it's okay. It's my show. So we're going to go with Madrid. Here's question number 2. And this is one of the things that I've learned, and it's been difficult for me also too, because as a recovering perfectionist, I always want to do things. The intention is to do it perfectly, right? The first time. The reality is anytime that you're building something, anytime you're looking to grow, anytime you're looking, to make an impact, chances are you're going to do something and you're not going to get the result that you expected. Some people call it making a mistake. Some people calling it have a learning opportunity. Some people have it as you paid full price for a seminar and et cetera, et cetera. But so, and you're a successful business owner, someone who's helping other people, making positive impact. And so along the way, I'm sure that you've probably had 1 or 2 mistakes. I'm gonna guess.
Oh yeah. Mm-hmm.
The thing is, I don't want you to focus on the mistake. What I want you to do is, because one of the things that I've noticed with really successful people is every time without fail, whenever there's a relevant mistake, they take time to learn actually what happened, fix that, and then put different strategies, tactics, and actions in place around the lesson that they learned. So I'd like for you to share, what is one lesson that you think every single person that's here as part of the Going Long family needs to learn, because you paid full price for the mistake?
Yeah, well, there's, I think the quote is, "Failure is a skill, so learn how to do it well." And I like that. That's by Alex Goldstein, I believe. Another is, "If you're not learning how to fail, you're not making decisions," by Catherine Cook. And that one too strikes me because, the idea is start failing as a skill set. Be comfortable with failing. Figure out that getting it perfect the first time, because I'm with you on that perfection piece. If you can just practice the art of failing and being comfortable with that, you'll end up happier as a result. You'll get past that initial yuck factor of not being perfect, and then crucially, you'll learn. So learn how to fail well, as it said. Let's see. He says, either I don't fail, I either win or I learn. Do you know who said that quote? I don't. I believe someone listening can probably put it in the comments, but
put it in the review, everybody. Put it in the review. Put it in the honest written review.
The 5-star review, please. So,
just honest. We just need an honest review. We don't care if it's 5-star.
All right.
Just honest.
I get to say, folks, leave him that 5-star review because he's working hard on making a great show. This podcast. So anyway, you'll never fail. You'll either win or you'll learn. Yep. So make it your very best to learn as much as you can through the failure.
All right. Fantastic. Love that. And it is something, especially for those of us that are recovering perfectionists, really, really important. So just continue to make decisions, to understand that failure is a part of the process. And I appreciate you sharing that with us as well. So lastly,
Nelson Mandela, by the way, that's who said the quote.
Okay. Perfect. Look at that, man. Such boom, you're
had to be perfect,
too, right? Yeah, exactly. I was just going to say, you read my mind, Mark. So here we go. So question number 3 is really about helping to feed our mind with knowledge. You've done a lot of that, but what's one book that you would recommend to the Going Long family today?
Well, I mentioned already Pamela Yellen's book, The Bank on Yourself Revolution by Pamela Yellen. It was a New York Times bestselling book. It is an incredible bestselling book year after year. And I'd say if just 10% of Americans and Canadians and really other people around the world read through this book and implemented it, the world would change. We wouldn't need credit cards. We wouldn't need a Federal Reserve. We wouldn't need student loans. Maybe the divorce rate would be lower. Maybe suicide rates would go down. I think if you can really control the banking function in your own life, everything else becomes easier.
Yeah, I agree with that. So we'll include the link to Pamela Yellen's book there. And man, I cannot, like, these things go, like, these conversations, literally, they fly by, Mark. I mean, as a fellow podcast host, I'm sure you have a very similar, if not the same experience. And I think back from the very beginning, you're talking about, the banking function, or even before that, you're talking about the ice cream and the family and being able to spend time together and that positivity. And then from there to the banking function, you've then given us a fantastic example using the fishbowl and ice cream once again. So ice cream is like this big theme with us today. And not only that, you're giving us examples with the planes, and if we're going to be able to get to one place, depending on the headwinds, et cetera. But fundamentally, what you're helping us to understand today is that there are vehicles that can be used to help us move forward, right? And you've made it very, very clear that your firm, you're here to help educate people, even fiduciary or not. It's continuing to be able to build a relationship, get to understand you. And so, like, the Going Long family is going, yeah, Billy, you're saying all this really cool stuff, but just ask him the question. So here's the question for you, Mark. All these wonderful things that you've shared with us, the Going Long family wants to know, what's the best way to get in touch with you, find out more about your firm and the things that you're doing?
Sure. We have as mentioned, a podcast, Not Your Average Financial Podcast. You can find it wherever you're listening to this show. Or you can go to kickstartwithmark.com. That's our great website where you can get to know have a lot of our resources delivered to you in one spot. That's kickstartwithmark.com. We've got our link to a 15-minute phone strategy session on there. If you'd like to meet with me or one of my colleague advisors, you can do that at kickstartwithmark.com.
Fantastic. So kickstartwithmark.com makes it pretty easy for everybody to find you. So what I'd like to just say, Mark, on behalf of the entire Go Long family is thank you very, very much for deciding to invest your time with us today and continue to help to educate us. So really, really appreciate that. Thank you.
My pleasure. Thank you.
All right, cool. And Mark, if you give me like 15 seconds just to wrap things up with the Go Long family, and then I'll get you out of here. So listen, Go Long family, Mark really shared it. He helped you understand more about the banking function, how you can use that to the best of your ability, help you to maintain more control and become your own source of financing. And especially when you're looking to grow, when you're looking to be able to leverage other vehicles, especially those that can be worked in two places at the same time. That seems pretty amazing. Listen to the conversation once or twice. Heck, share it with your family, with your friends. Talk about the concepts that Mark has shared with you today, and even reach out to him. Kickstart with Mark. I mean, he makes it really, really easy. So while you're doing that, while you're taking action, I'll be here preparing for the next conversation. So until then, go out and make it a great day. Thank you very much.